Right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Right, okay, everything's good to go. All right, okay. Right, so of course, before we start, please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right. So my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Now, before we dive into the charts on TradingView, right, you will just take a quick look at some of the key economic events that are lined up this week. Right, we've got two central bank announcements. We've got the RBA, the Reserve Bank of Australia, on Tuesday, that's tomorrow, followed by the Bank of England on Thursday. Right, so 7th and 9th of May, we have two central bank announcements. Right, so here's the calendar for this week. We've got other data releases as well. Of course, we've got UK GDP data out on Friday, 10th of May. We've also got Canadian employment data on Friday as well. And of course, like I mentioned, we have the cash rate announcement by the RBA tomorrow, followed by the press conference by RBA Governor Michelle Bullock at 5:30 a.m. Take note the calendar here. The time on the calendar here is GMT time. So the cash rate is going to be released at cash rate announcement will be released at 4:30 a.m. GMT, followed by the press conference at 5:30 a.m. GMT. And on Thursday, 9th of May, the Bank of England will release its monetary policy report at 11 a.m. GMT, followed by uh, by Bank of England Governor Andrew Bailey with his speech at 11:30 a.m. Now, when we look at the current interest rates, right, or the cash rate for the RBA, it currently stands at 4.35%, and it's widely expected that the RBA will keep this rate on hold once more. Similarly, the Bank of England is also expected to keep its bank rate on hold at 5.25% as well. All right, so when we look at the RBA cash rate, right, uh, they did raise it about two meetings ago, and then they kept it on hold at the previous meeting, right? So it's quite likely now they're going to maintain the cash rate at the current level of 4.35%. There's a couple of reasons. One is the cost of inflation is still slightly elevated, right? The RBA has a target of 2 to 3%, and they expect inflation in Australia to hit this target in 2025. So that's next year, right? You can also see that they've also noted that the cost of services have remained elevated in Australia, although the pace of easing is a little bit gradual. Right, so once again, as you look at inflation data in Australia, on the left, I have the chart for headline CPI, and on the right, I have the chart for core CPI, both on an annualized basis. You can see headlines at 3.2%, while the core is at 4.2% for the month of March, right? Well above the target of 2 to 3%. Now, of course, they're not going to increase interest rates uh, to tame inflation further, but they're going to keep policy tight by maintaining it at the current level. And when we look at the PMI output over the last few months, we can see PMI activity has rebounded strongly. This is the chart for the composite PMI, so that covers manufacturing and services. So we can see that since November of 2023, PMI output has rebounded quite strongly. So we have strong economic output combined with persistent inflation. So we are definitely not going to see a rate cut, or it's not, I wouldn't say definitely, we are quite unlikely to see a rate cut tomorrow. However, we may see an outlook and a press conference by Governor Michelle Bullock to be maybe leaning on a little bit on the dovish side. Now, should we see any dovish indication in the statement or during the press conference, that is quite likely going to cause the Aussie to sell off. So do take note of that. It's quite unlikely they will cut interest rates tomorrow, but they may come out with a relatively dovish outlook on future monetary policy action. So now that may be enough to cause the Aussie to sell off tomorrow. All right, then coming to the Bank of England, right? So once again, as you can see, they've kept the bank rate at 5.25% for the last 3 to 4 meetings, if I'm not mistaken, right? So policymakers are still waiting for clearer signals to show that the persistent inflationary pressures are truly subsiding, and uh, the economic trajectory is optimistic as well. Actually, the UK active economy has rebounded pretty well in the first quarter of 2024. We'll look at the PMI chart later to show evidence of that rebound. And they are looking to cut rates, right? The Bank of England are looking to cut rates, so it's quite unlikely they'll do so at this meeting. But just like the RBA, they may communicate a pretty dovish outlook to future monetary policy action, which may be enough to cause a sell-off in the pound as well. Right, so when we look at inflation data in the UK, on the left I have the chart for headline CPI, and on the right I have the chart for core CPI, both on an annualized basis. Right, so we see headline CPI coming in at 3.2%, while the core came in at 4.2% in March. Right, this is well above the Bank of England's target of 2%. Right, so inflation is heading in the right direction. The trend is to the downside. That's great. It's heading in the right direction, but it is still relatively elevated, and it's well above their target of 2%. So that may be enough for them to prevent the Bank of England from cutting rates on Thursday. Now, as I mentioned, economic output and PMI activity has rebounded quite strongly in the UK. So we see that since November of 2023. Right, we see the PMI composite reading, which was contracting in August till October, rebound into expansion territory in November onwards. And since then, output has been relatively strong. So we have a pretty robust economic output with a strong rebound since last November. Plus, inflation is still persistently stubborn. So that's enough for that may be enough for the Bank of England to keep rates on hold once again. But remember, they are quite likely gonna, or they could come out with a pretty dovish outlook with regards to future monetary policy action, which may be enough to cause the pound to weaken on Thursday. Okay, now with that, let's move on over to the charts and trading view and start the analysis on the dollar index. Now, of course, as we go through the charts, right, do not hesitate to drop your requests in the chat box, right? I'll be more than happy to go through any analysis that you may have for any other currency pairs, the crosses, commodities, and the indices as well. All right, okay, great. All right, okay, so let's start off with the dollar index, right? So we can see last Friday, 3rd of May, we had a very bad miss in NFPs on non-farm payrolls, right? The NFP came in at about, I believe, 170,000 versus the estimate of 240,000. That was a pretty bad miss. As well as we saw the unemployment rate edge higher from 3.8% to 3.9%. So overall, it was a pretty poor employment report out of the US, which caused the dollar to sell off strongly last Friday, which meant the dollar index dropped as low as 104.52. However, this move to the downside was not sustained. Actually, when you look at it on the 30-minute time frame, right, this is the candle where non-farm payrolls was released. It was dropped at 12:30 p.m. GMT time. You can see prior to the release of non-farm payrolls, dollar index was trading around 105.20, and it proceeded to drop as low as 104.50, so dropping about 70 pips in a matter of minutes. However, within an hour, we saw the dollar index rebound quite strongly, and it pretty much rose higher to recover all the initial losses, right? So although we did see a bad NFP miss, which initially caused the dollar to sell off, there was a strong recovery, and then we see it sort of consolidating around 105 for most parts of today, right? Okay, so that's why we saw the dollar index plunge last Friday because of the bad NFP miss. Right now, when we look at the daily time frame, right, this level here at 105 is a very significant overlap level, right? We see the dollar index finding support here back in November of 2023, running into resistance here in middle of February. You can see the market structure showing us a clear or significant swing high resistance, and then running into resistance once more on the 2nd of April, with the market structure highlighting a very significant swing high resistance once more. Now, this is a critical juncture for the dollar index, because any clean break below this level could be a potential confirmation for further downside action. Remember, we have a fundamental catalyst that occurred last Friday, which was the poor NFP data, right, which could add further downward pressure on the dollar. Right, so should we get a clean break under 105, that would give us confirmation of further downside action for the dollar index, and if that were to occur, the first major support would then be at about 104.09. You can see price making a strong pullback here at the beginning of April, finding support here stabilizing around 104.10 before reversing to bounce very strongly. Okay, right now let me just tidy up some of the annotations as well, and then we can see why 104.09 is a significant pullback support level. Right now, when we zoom in a little bit, right, we can see that we also have the presence of hang on, here we go. Yeah. Right, we also have the presence of a 61.8% Fibonacci retracement. So we started this retracement here from this swing low on the 8th of March, going up to the high here on the 16th of April. We can see that the 61.8% Fibonacci retracement aligns quite well with this pullback support here. So we have a pretty strong support zone that's bounded between 103.90 and about 104.10, right? Approximately between these two levels, right? And also we also have the presence of a Fibonacci retracement at 38.2%, which aligns well with 105. And when we do a Fibonacci retracement from this low here, this pullback here on the 9th of April, going up to the high on the 16th, we see another 61.8% Fibonacci retracement aligned very well with this overlap level here. So yes, 105 is indeed a pretty significant overlap support level for the dollar index, right? We have the presence of two Fibonacci retracements, the 38.2% and the 61.8%. However, there is a pretty decent case that we may see further downside action for the dollar index should we see a clean break below this level. Remember, we have the bad NFP data on hand. Plus, we also had GDP, or the advanced estimate for first quarter GDP in the US come in lower than expected as well. So we have slowdown in economic activity, plus a weak labor market based on April's data. So all of which could potentially cause the dollar to push lower over the next couple of days. But remember, this is a key overlap level here. To see further downside action or downside confirmation, we would need to see a clean break below this level before we can really see the acceleration for the dollar index to the downside. Now, of course, to the upside, this pullback resistance that occurred on the 30th of April at 106.30 is the resistance level here, right? We also have the presence of a Fibonacci projection. This projection, remember, projection uses 3 points. So the first point starts from this pullback here on the 9th of April, going up to the high here, 0.2 on 16th of April, and of course ending with last Friday's low on the 3rd of May. So we see the 61.8 projection aligns quite well to, or lies quite close to where the pullback resistance has occurred on 30th of April and 1st May. There may also be an intermediate resistance level here, right? We can see from where price is currently trading, 130 pips is quite a far range. I do see a potential intermediate resistance at about 105.57. Right, previously you can see this level here function as a pretty strong support zone, right, since 23rd of April till the 1st of May. So a period of about 5 to 7 trading days, the dollar index failed to break under 105.57 convincingly, right? You can see, of course, the bottom of the wicks extending slightly below this level, but generally you can see that 105.56 or 105.55 was a strong support level before finally being taken out. Now, what was previously a pullback support level could now potentially function as resistance. So hence I've highlighted 105.57 as a potential intermediate resistance for the dollar index to the upside. Right, okay, so these are the key levels for the dollar index on the daily time frame. Let's move on down to the 4-hour time frame and see if we can fine-tune the analysis if necessary. Right, now that we are here, of course, on the 4-hour time frame, I'm going to adjust this pullback resistance here. And of course, if I look at it all the way till 16th of April, this is a very significant resistance level at 106.44, and we have the projection here as well. Okay, so let's just highlight this all the way up. Yes, of course, it's a pretty wide range, but just to highlight that we have the projection and a pullback resistance here to highlight this resistance zone here. Remember, okay, we also identified this pullback resistance level at 105.57. We can run a Fibonacci retracement now from this high on the 1st of May going down to the low here on the 3rd of May. We can see that the intermediate resistance at 105.57. We also have the presence of a 50% Fibonacci retracement that aligns close to this level here. So we'll just keep 50% on for now, right? And we'll just highlight this as a zone, right? So this is a pretty strong resistance zone for the dollar index as well to the upside. So between 105.50 and 105.60, there's an intermediate resistance zone, followed by the main resistance that comes in at around 106.50. Now remember, price is testing this significant overlap support, and should we see a clean break below this level, then we are quite likely to see further downside action. However, also take note, but because this is a pretty significant overlap support here, we could see the dollar index push higher, and if it does climb higher from off this level, it's quite likely to run into resistance at this zone between 105.50 and 105.60. Right, so for the downside confirmation, right, I would say wait for the 1 hour candle to close below this to close below 105 to get that higher level of confidence that we do have a potential bearish breakout on hand. So take note, I would say wait for the 1 hour candle to close below 105 to give us a higher level of confidence that we may have a high probability bearish breakout opportunity at hand. All right, take note, 1 hour candle to close underneath the downside confirmation level to give us that opportunity to potentially go short on the dollar index. All right, okay, so that's what I have for the dollar index. On the 4-hour time frame, no major changes to the levels. Maybe I'll just fine tune a little bit here. The first support, bring it down a little bit here. No changes to downside confirmation. Intermediate resistance is fine, and first resistance as well. All right, okay, now let's cover the euro and the pound, since we've got the Bank of England as well, and then we'll cover on the Aussie as well, as we've got the RBA lined up tomorrow. All right, so let's go on over to the euro. Right, so previously this level here at 1.0729 was a pretty significant overlap resistance level, right? Is wait, let me go on to the daily time frame first, right? Okay, I think that's fine. Let's do the analysis today on the 4-hour time frame. Right, main one was dollar index. We did it on the daily time frame to establish the major levels, and then from there, of course, we can translate it to all the other major currency pairs. All right, so when I look across 1.0730, this is a very significant level here, right? We see the euro finding strong support here at the beginning of April, finding support once again on the 10th of April before finally breaking under, and then as it retraced higher, we saw it ran into resistance on 25th of April, and again on 26th. Of course, we see it protruding slightly above this level, but generally you can see that this zone here has been pretty strong, and of course running into resistance at the end of April and early May as well, right, over here as well. So what was previously a strong or a significant overlap resistance could now potentially be support here as well. So previously we had a breakout level here, this pivot here, this pivot at 1.0730 was functioning as a overlap resistance, which finally got taken out. Now of course we're going to adjust some of the levels here, right? Let me just tidy up the chart a little bit. Right, so based on how the euro is currently trading now, right, I'm going to adjust the first resistance, bring it up to this pullback here that occurred on the 9th of April at 1.0888, and I'm going to move my pivot to this overlap level here, right? We see the euro finding pretty decent support here on the 5th of April, and last Friday running into resistance at 1.0809 as well. So this creates a significant overlap resistance level, which we could see the euro rise strongly towards and probably stall around this level here. Right, so if you have any long euro dollar positions, right, targeting the area of the pivot, which is at about 1.0800 to 1.0810, is a good zone to identify as a potential take profit. Right, now of course, if you're moving the pivot up, we're going to adjust our first support as well. Where I do see strong support is this pullback level here that occurred on the 25th of April and then on the 26th as well. So that level at 1.0740 is our key support here. Right, let's see, there's a Fibonacci retracement as well. Which one have we used? I believe this is the 50%. Yep, it's the 50% Fibonacci retracement. Let me adjust the labeling so it's maybe a bit more visible. Right, 50% is here. So we do have a pretty strong support zone as well. Right, so this strong support zone lies between 1.0730 and 1.0740 here. Right, so okay, so we if the dollar index continues to sell off today, right, we're of course quite likely to see the euro climb higher, and should that happen, right, and if you have any long euro dollar positions, aiming for the pivot point here would be a good suitable area to identify as a take profit zone, right? So this is a pretty decent resistance zone that start from 1.0795 all the way to 1.0810, right? So this is a resistance zone that can be used to identify as a suitable take profit for any long euro dollar positions that you may have, right? So we could see it rise up towards this zone here and stall and pull back a little bit. Okay, so no changes to the first support and first resistance. All right, okay, these are the key levels here. And wait, let me see if we look at Ichimoku. Okay, no, it's trading above the Ichimoku cloud, so that's fine. Okay, all right, okay, let's just keep it hidden for now. All right, then we'll move on over to let's do the Aussie first, right? Since the Aussie is coming up tomorrow, let's do the analysis for the Aussie first, and then we'll go on to the pound. Right, so when we look at the Aussie here on the for our time frame, right, we can see that it rose. Okay, first of all, it rose very strongly last Friday, coming as high as 66.50 before pulling back, and looks like it's starting to retrace higher as well. So where I do see strong resistance is at this pivot point at 66.77. Why is this a strong pivot point? Well, we can see back in early January, right, this level here at 66.76 functioned as a pullback pretty decent pullback support level here. Of course, we can see the bottom of the wicks protruding underneath it, but generally this was a pretty strong pullback support level, which now could potentially function as resistance. And when we look at the current market structure, we see this is a pretty significant swing high resistance that occurred back on 8th of March, right? So this creates like an overlap zone for the Aussie. So 66.77 is a pretty significant overlap resistance zone that aligns well with the 61.8% Fibonacci retracement. Now let's see how do we find this retracement. Right, so just zooming out a little bit. So we started this retracement here from this swing high on the 28th of December 2023, ending with the swing low on the 19th of April. You can see that we have we've pulled up, or we've highlighted the retracement levels at 61.8% and 78.6%. 61.8% aligns very well with the pullback support or pullback resistance that we have identified as the pivot, which is at 66.77. And higher up, we do see, let me just zoom in a little bit here, right, we do see a pretty decent pullback resistance level here as well at 78.6%, right? You can see that price previously ran into resistance here on 20th December 2023, pulled back before breaking higher. Then as it fell in early Jan, it did find support here as well for about half a day or so before dropping lower. Then as it retraced higher, ran into resistance again and dropped lower, tried to retrace higher, ran into resistance again, and continued to slide lower again. So you can see 67.62 is indeed a pretty significant overlap resistance level, right, which also has the presence of a Fibonacci retracement at 78.6%. Right, so these are the key resistance and pivot levels. So once again, right, we see the Aussie climbing quite steadily, right? It did pull back initially last Friday, right after the NFP did pull back, but it does look to be climbing higher. So should you have any long Aussie positions, right, of course, then looking at targeting a zone between 66.50 and 66.70 would be a suitable zone to identify as your take profit. Right, okay, for the first support, I'm just going to tweak the first support a little bit here, and we can see this is a pullback resistance level here that occurred on 29th of April, where you can see the market structure actually showing a pretty significant swing high resistance. This is, I would say, that this is a swing high resistance level back in 29th of April. Then as price came up here last Friday, it stalled for a little bit as well, right, before finally breaking higher. So this creates a pretty significant pullback resistance level, which now could function as a pullback support. So that's why I've highlighted the first support at 65.76. Right, there's also a little intermediate support that I would like to highlight based on today's price action. Right, this intermediate support lies at 66.11. Right, we can see that since last Friday and for most parts of today as well, the Aussie has managed to stay above 66.10. This is a pretty decent intermediate support level to take note of as well. So should you have any long Aussie positions here, right, take note, this is a pretty decent intermediate support level to take note of. So if we do see this support level being taken out, that means the Aussie is quite likely going to drift lower towards the first support here at 65.76. Right, there may be a Fibonacci retracement that we can use as well, starting from here on 30th of April, going up to the high of last Friday. Is there 38.50? Does seem a little bit far. Yes, we do see the presence of a 38.2% Fibonacci retracement that aligns very well with the first support at 65.76. All right, okay. Is there any other retracements or extensions that I could use? Perhaps we can try and find an extension, right? So to find extension levels, it's simply using the retracement tool. So we're going to start from here. 29th of April going down to 30th of April. The key extension levels lie at 127 and 161%. So we can see that the Aussie has already climbed above the extension at 127%, and it does seem like the next resistance zone is where the 161 extension lies. So let's just keep 161 and highlight it as a zone. All right, so that is why I say if you have any long Aussie positions, right, looking at this resistance zone here between 66.60 and 66.77 is a decent zone to identify as a take profit level. All right, okay, so this is what we have for the Aussie. So take note. So remember, they're not going to cut. The RBA is not going to, very likely not going to cut rates tomorrow. However, they may uh, uh, present or lean on the dovish side, right? They may have a statement, monetary policy statement, and a press conference that leans more on the dovish side with regards to future monetary policy action, which could be enough for the Aussie to sell off. So if the Aussie does sell off tomorrow, then we might see it reverse around 66.50, right? If let's just assume it continues to rise higher overnight towards 66.70. And if tomorrow at 4:30 a.m. GMT we see a pretty dovish statement and a press conference by the RBA, that may be enough for the Aussie to reverse and drop lower. All right. All right, Sagar. Okay, you've got a question on short Aussie CAD and Aussie Kiwi. All right. Okay. Let me. All right. Okay. Right. That's great. Let's cover that as well. All right. Okay. Okay, but let me just cover pound dollar first, right? And then we'll come on to your analysis, all right? Because we've got the Bank of England on Thursday as well. Let's just try and quickly identify uh, the key resistance and support levels for the pound, right? Okay, so these levels were identified on the daily time frame, right, for the pound here. So this upside confirmation level was previously an overlap resistance, which does look like it's going to be broken today. So we do. So what this tells us is we have a potential bullish breakout for the British pound here. So if you look at the 1 hour candle, right, we did see it close above here today at 7 a.m. GMT time. So when the 1 hour candle closes above this level here, it gives us a higher level of confidence that we may have a potential bullish breakout on hand. So that means if we had seen this candle close here at 1.2567, we would have gone long at the next candle. So that means at 1.25, let's just say we open at 1.2570, right? And then you would place your stop loss just below this intermediate support here at 1.2536. So probably putting your stop loss at about 1.2520, giving yourself a 50 pip buffer for a potential bullish breakout is not a pretty bad area to target, level to identify, as well as using this first resistance at 1.2677 to help us identify a suitable take profit level. Right. Okay. So going back to the daily time frame, right? So we do have a potential bullish breakout on hand for the pound, and where we can identify a suitable take profit level would be around the region of the top of the spike here at 1.2634, and of course between 1.2650 coming up towards the first resistance. All right, going down to the 4-hour time frame. Right, so I think first support is okay. This is the pivot level, right? Upside confirmation here is referring to the pivot here. So we've seen a break above the pivot today as well, giving us some a potential indication for bullish breakout. And should we see the pound continue to rise higher, identifying a suitable take profit between identifying a take profit level between 1.2633 and 1.2670 would be a pretty decent area to identify. All right, okay, now let's go on to Aussie CAD and Aussie Kiwi. All right, let's do that as well. Right, okay, here we go. All right, let's start the analysis with the daily time frame to establish the major resistance levels, and then we'll work our way down into the 4-hour time frame. All right, so you can see this was price is trading quite close to a major resistance level here, right? You can see price is currently testing this first major resistance. Why do I call this a major resistance? We see a significant swing high resistance that occurred here in July of 2023. We also see another swing high resistance that occurred last December. And you can even argue here there's a swing high resistance in November as well. Right, so this all indicates a very significant resistance level, which is currently being tested quite strongly. And the second resistance is coming in at this swing high resistance here at 91.05, right back in June of 2023. We can see the market structure clearly exhibiting a strong swing high resistance. So quite clearly, this is the second resistance for the Aussie CAD. Now, what about the first major support? Right, when we look at it here, this market structure here on 9th of April shows another significant swing high resistance. So this was previously a swing high resistance. Now, of course, with the Aussie CAD breaking above it, this level here at 89.95 is quite likely to be or quite likely to function as the next support here. Okay, so with that, so now that we've established the resistance and support on the daily time frame, let's see if there's any Fibonacci retracements that we can use. Right, I'm going to run a retracement from this swing high 9th of April going down to the swing low on the 19th. I'm using this retracement to help me identify potential extension levels. So the key extension levels lie at 127 and 161%. So you can see the Aussie CAD is indeed testing this key resistance zone here. So with regards to the stop loss, okay, I'm not sure what is your entry level, but because I see this is a strong resistance barrier as well as the 127% Fibonacci extension, normally I'll use this extension level as a guide. So if I were to place any stop loss level, it would be slightly above this extension level. So let's just assume I've kept a 15 pip buffer above 127%. So that means my stop loss is going to be at 90.85. Right, so this is where I would identify a stop loss level based on the Fibonacci extension at 127%, as well as this multi-swing high resistance at 90.55. So take note, stop loss positions, stop loss levels for any short positions would be placed above major resistance zone. So where I have identified the major resistance zone is between 90.55 and 90.70 pretty much. So, and we're placing the stop loss 15 pips above this major resistance zone. So we need a little bit of a buffer. So hence we're not placing the stop loss at exactly the extension level, but just above it. Right. Okay. So this is for the Aussie CAD. All right. Okay. Now what about, okay, let's go on to the lower time frame. Okay, now we are on the 4-hour time frame. Right, you can see the current 4-hour candle does seem to be retreating away from the extension at 127%. So as you can see here, remember we have this multi-swing high resistance at 90.56 as well as the Fibonacci extension at 90.68. Right, this highlights a strong resistance zone, so stop loss is going to be placed above this level here. Now, depending on your risk management style, you would place the stop loss anywhere between 10 to 15 pips above this extension here to give us that little bit of breathing space. Now, what about support level? Right, should we see the Aussie this Aussie CAD reverse and drop lower, right? Where can we identify suitable take profit levels? Where I would do so would be where this first support is and the top of this wick, right? So I would use the zone between 89.95 and 90.07 as a potential take profit zone should we really see a reversal in the Aussie CAD and it does drop and does continue to drop lower. All right, so take note, these are the key levels for the Aussie CAD for stop loss level and take profit uh, zones as well. Okay, you all right, Sagar, you also had a request for Aussie Kiwi. All right, so let's take a look at that as well. Where's my Aussie Kiwi? Okay, hang on. Right, so once again, we'll start the analysis on the daily time frame. Right, so we can see here this is a swing high resistance that's taken place on 19th of June 2023. We have another swing high resistance that occurred on 20th of Feb on 2023. So we've highlighted potential resistance zones as well by looking out for significant swing high resistance or overlaps or pullbacks. Right, so quite clearly the first resistance, I'm going to use the body of the candle here. The first resistance for the Aussie Kiwi is at 1.1049 or 1.1050, pretty much is where the first major resistance lies. And of course, we have the top of the wick here as well. This is the major resistance zone for the Aussie Kiwi. And where the second resistance is probably going to be around this level here at 1.1150 as well. This is where the second resistance for Aussie Kiwi lies. Now, with regards to the stop loss level, if you have taken a short on Aussie Kiwi, okay, once again, I'm not sure what is your exact entry level, but let's just say it is around 1.1. Let's just say it's around there, $1.10. Then I would be looking at this resistance zone to help me identify a suitable stop loss. So I'll be using the top of this wick. We can see the top of this wick sits at 1.1087. So I'll probably place about, let's just say, a 13 pip buffer, for example, and then it would mean my stop loss is at $1.11, right? So I'll place my stop loss slightly above a major resistance zone, and then yeah, for any potential short Aussie Kiwi positions. Okay, now what about suitable support levels? Right, when I look across this level here, right, all the way till here, this was previously also functioning as a swing high resistance back on November 2023, and then a pullback resistance here on the 8th of April. So previously these two levels were major resistance areas. Now, of course, with the Aussie Kiwi breaking above it, which is at 1.0942, this level here could now be a potential pullback support. So that's how we've identified the first major support for the Aussie Kiwi, and let's label it as such. Now, this would be a good level to identify as a potential take profit for any short Aussie Kiwi. This would be, I would say, maybe this would be your first take profit level, and then the second take profit level that you can target is this pullback that occurred here on the 18th of April, which is at 1.0852. So this is where I would identify my second take profit level for any short Aussie Kiwi trade. So take note, stop loss is going to be placed above this major resistance zone here. That means stop loss is going to be placed at around $1.11. Take profit levels for any short trades can be identified using the first support and second support. So your first take profit level could be around 1.0942, followed by the second take profit level probably around 1.0852. Right, we can also run a Fibonacci retracement from here. This swing low on 22nd of April going up to the high of last Thursday. Let's pull up all the fibs. Let's see if they align well with any of our support levels. All right, we do see the 38.2% align exactly with the second support, so let's just keep that on. All right, okay, let's see if we can use any Fibonacci extension levels. So I'm going to run a retracement from here, this high on 2nd of November, going down to this low here on the 22nd. So the key extension levels lie at 127, 161%. Right. So we also have the presence of the Fibonacci extension at 127% that aligns very well with the first resistance zone. So we've identified a suitable stop loss level here. Right. So we have identified a major resistance zone based on a multi-swing high resistance, the top of the wick, as well as a Fibonacci extension at 127%. Right, 161 sits above the second resistance. We don't need it for now, so let's just get rid of it and just keep our attention on the 127%. All right, okay, so these are the key levels for the Aussie Kiwi. So this is a good example of how we can identify suitable stop loss and take profit levels, right? All right, thanks Sagar, thanks for the request. This is a great example for all other viewers as well to see how we perform our analysis on a daily and 4-hour time frame. And then it's important to identify the significant resistance and support areas, because these are the levels or zones that we can then use to identify suitable stop loss levels as well as suitable take profit levels. Right, okay, let's just see on the 4-hour time frame. Is there any need to fine tune the analysis? I don't think so. I think this is fine. I think there's nothing really major to analyze or to fine tune. Let me see. All right, no. But however, you do see Aussie Kiwi has been in a strong bullish trend. Right, we have the presence of this Ichimoku cloud is not very clear here. Let me see if I can improve the visibility. Right. So when the cloud is green in color and the currency pair is trading above the green Ichimoku cloud, it highlights strong bullish momentum. So take note, actually, this currency pair, Aussie Kiwi, is is exhibiting strong bullish momentum. So any short trades should be taken with, you should be wary of taking any short trades as well, because we may not see a sharp pullback as we expect. Remember, when the currency pair is trading underneath the bearish Ichimoku cloud, which is red in color, there may be a higher probability of further downside action. But when the currency pair is trading above a bullish Ichimoku cloud, the pullbacks may not be as strong or as deep as we would like. So take note of that. It is the Aussie Kiwi is exhibiting very strong bullish momentum, and any potential pullbacks may not be as deep as we would have liked. So take note of that as well. All right, okay, so this is what we had for Aussie Kiwi. All right, okay, then let's move on over to the commodities. Let's start with gold. All right, this is the ticker for spot gold, which is XAU USD. Right, so once again here, although we do see spot gold prices pull back quite sharply since mid-April, right? The cloud is still green in color, right? So we may see this bullish momentum continue to pick up. So this may be indicating a healthy pullback for spot gold prices here. Now, when I zoom in a little bit, for now I'll remove the cloud. Okay, when I zoom in a little bit, you can see I've drawn an descending trend line as well, and we can see the market structure here, testing this descending trend line several times. However, today, based on the current daily candle today, we does seem like we have a potential breakout above this descending trend line, which could mean we could see gold prices climb higher, right? So should we have taken a potential bullish breakout opportunity here, based looking at this breakout above this descending trend line, we can then use the region of the first resistance, which is at $2,360 per ounce, as a suitable take profit zone, right? And also this pullback support level here, which is the first resistance, also has the presence of a 50% Fibonacci retracement. We started this retracement from the all-time high, which was on the 12th of April, going down to the low of last Friday. So we see a pretty decent pullback resistance or overlap, I would say, right? This is support here, resistance here on 26, creating an overlap. So we see a pretty significant overlap resistance level that aligns well. That also has the presence of a 50% Fibonacci retracement. So any long gold positions, should you have any long gold positions, using this first resistance and the 50% retracement is a suitable zone to identify your take profit level. Right, we had identified this pivot at 2,285, right? We can see gold prices finding support here since the 30th of April. You can even argue here on the 23rd, price did come close to this level here before retracing higher. So this pivot at 2,285 is a pretty decent pullback support level, and the first major support for gold prices comes in at this pullback support at 2,189, right? This is a pullback support level, or this was previously a pullback resistance level that was in place since the 8th of March till the 27th of March, which now could potentially function as support. And it also has the presence of a 50% Fibonacci retracement here. So this retracement starts from this low here on the 14th of February going up to the all-time high. And we can see that this is a strong support zone between 2,188 and $2,207 per ounce. Take note, we do have a potential bullish breakout for gold, and that means we can use this first resistance to help us identify a suitable take profit zone. Now when we look at the 4-hour time frame, right, even on the 4-hour time frame we can see a clean break above this descending trend line. And if I go on the 1-hour time frame, yeah, okay, if I go on the 1-hour or 4-hour time frame, we can see, okay, probably this descending trend line needs to be adjusted. It looks a little bit better on the daily time frame, but however, if I look at it on the 4-hour time frame, okay, we do not have that confirmation yet of that bullish breakout here. However, if we base the analysis on the daily time frame, it does seem like we do have a pretty good case, or a pretty decent case for a potential bullish breakout here. Right, so that means if gold prices are rising, quite likely dollar index is falling as well, right? You can see here, dollar index initially climbed as high as 105.20 earlier today, but it has since dropped to dropped under 105.10. So we could remember, we do have a potential downside confirmation level for dollar index. So if this gives way, then it's quite likely we're going to see, of course, gold prices push higher. All right, let's move on over to oil. So XTI USD is an instrument that tracks the WTI crude oil futures, right? Okay, so let's identify the key levels here, or let's see how we got round to identifying these key levels here. All right, since the beginning of April, crude oil prices have pulled back quite sharply, right? With WTI oil hitting $88 per barrel at the beginning of April, before now dropping under $79 per barrel here. But it does seem to have stabilized today and is retracing higher, briefly climbing and has climbed above $79 per barrel here. Now, we have identified this pivot level as a major support zone, right? We see $76.53 as a strong pullback support level, which also has the presence of a 61.8% Fibonacci retracement. Now, this retracement started from here, 5th of February, ending with the high here on 5th of April. We can see that we have the 61.8% identify a strong support zone here. So although WTI oil has reversed slightly above the strong support zone, let's see, maybe it could continue to rise higher. However, if it does retrace to drop lower, we may see WTI oil stabilize around this zone between $77 per barrel and $78 per barrel. Right, okay, in terms of resistance, there's a pretty decent pullback resistance here at $81.38. Previously, this was a strong support zone back in 22nd of March, and then again on 22nd of April as well. So what was previously a strong support zone could now potentially function as resistance. And of course, for the first major support for WTI oil is this significant swing low that took place on 5th of February, right? You can see price, the market structure highlighting a very, exhibiting a very significant swing low market structure, which tells us that this is a strong support zone here. Right, so these are the key levels for XTI USD. All right, Dixit, you have a question with. All right, okay, with USDP. All right, for crypto, we've got Bitcoin and Ethereum. I'm not sure which token you're referring to. I'm not sure if I can get that here. Let me see. All right, but if you have a request for Bitcoin and Ethereum, I'll be more than happy to do the analysis on that. I'm not sure which coin you're referring to here. Let me see if I can try and figure this one out. Are you referring to uh Tether? Right, I think you're referring to Tether. Let me see if I can find that here. No, all right, okay, sorry, I don't have that. Uh, I don't have the token that you're looking for here, but okay, let's just do the analysis on Bitcoin, right? This is similar. All right, okay, yeah, Bitcoin, you can do that as well. Okay, so this is the daily chart for Bitcoin here. So once again, we see a presence of a descending trend line, right? You can see that since 8th of April till the 3rd of May, uh, Bitcoin was trading underneath this descending trend line, and we do have a potential bullish breakout take place, right? The Bitcoin breaking above this descending trend line, and we also have identified a potential upside confirmation level here. Right, so this level here was previously a pullback resistance. So with Bitcoin breaking above this descending trend line as well as this upside confirmation, we could potentially see this coin move higher as well. So once again, let's see on the 1 hour time frame, do we have that upside confirmation? Yes, we do see this candle here at 8 a.m. GMT closing above the upside confirmation, which gives us uh, a higher level of confidence that we may have a potential bullish breakout on hand, right? So take note, this is how we can use identify a major breakout level, and then looking at the 1 hour candle to see if it does close above this breakout level here, and at least we gives ourselves a higher level of confidence. Remember, this is not a guarantee that this is a potential bullish breakout, but when the 1 hour candle closes above a significant uh, breakout level, it gives us a little a higher level of confidence to for potential bullish breakout. All right, so back on the daily time frame, right? Okay, so the first major resistance uh, for Bitcoin will come in at about $68,900, right? This is a overlap resistance here that aligns well with the 78.6% Fibonacci retracement, right? So we started this retracement from this high here on the 8th of April, going down to the low here on the 1st of May. So we have the 78.6% Fibonacci retracement aligned very well with this overlap. So that's where the first major resistance is. I also see a pretty decent intermediate resistance at around $68,866. And previously, you can see on 22nd of April till the 24th, as Bitcoin was retracing higher, it stalled around this region of $66,900 before reversing lower. So take note here, uh, we do have a potential bullish breakout on hand for Bitcoin as it broke above the descending trend line as well as the upside confirmation level, and the next resistance is going to be likely to come in at around $66,860. Right, first support is very clear. This is a major significant swing low that occurred uh, last week on Wednesday, on Thursday. So quite clearly the first support for Bitcoin is at this level here. Right, let's see if there's any retracement levels that we could use potentially. All right, let's start a retracement from here. This low on 23rd of Jan going up to the all-time high. Let's pull up all the fibs. Right, okay, 38 price has already retraced underneath 23 and 38.2%, so these levels are no longer valid. What could be useful would be the 50% and 61%. So let's just keep those two retracements. And so first support, I'll highlight it highlight it as a zone, right? That's bounded by the 50% Fibonacci retracement and the pullback support at 58,252. I also see another pullback support at 52,000, which is a level that has the presence of the 61.8% Fibonacci retracement. So this is where I'll identify the second support as well. All right, so these are the key levels for Bitcoin on a daily time frame. Let me see on the 4 hour time frame. Is there anything else that I can do? No, I think this is fine. All right, so take note, we do have a potential bullish breakout for Bitcoin, right? Remember, it's broken above this descending trend line and above the upside confirmation as well. Let's see if there's any Fibonacci. All right, okay. We can also see that, remember, when the Ichimoku cloud is green in color, it tells us is the green cloud itself can also be an area of support, which is what seems to have happened as well last week. Bitcoin retracing into the cloud, finding support at around $58,000 and before reversing to climb higher. right? So we do see this bullish momentum, a potential resumption of the bullish momentum to continue for Bitcoin today. All right, okay. So as we come towards the end of today's webinar, all right, I still have time for one more request. I'll be more than happy to go through it. So if you have any last requests, please do drop them in the chat box right now. Otherwise, let's just wrap up the session by looking at the dollar index. Take note, right? This is it is at a pretty significant support level here, which is at 105, which has been identified as our downside confirmation. Right, so should we see a clean break below this level, we may see dollar index drop further, because we've also saw a poor NFP data last week. We saw a big NFP miss, and we saw the unemployment rate edge higher. Plus, we also saw the advanced estimate for first quarter GDP in the US come in lower than expected. So we are seeing a slowdown in the US economy and a potential weakening of the labor market, which could potentially add further downward pressure on the dollar index. So take note, it is currently trading at a significant support level, and a clean break below 105 is likely to see the dollar bears return, and they may drive it all the way down towards the first support at 104. All right, okay. So before we wrap things up, uh, take note here. These are the key news events for this week. Right, the two events that I'd like to highlight are tomorrow's RBA cash rate announcement at 4:30 a.m. GMT, followed by Bank of England's monetary policy report on Thursday 9 a.m. or 9th of May 11 a.m. GMT. All right, so we'll just wrap up with the and disclaimer. All right, so thanks everyone for tuning in to today's live session. Do look out for all upcoming webinars by IC Markets, and I wish you all the best in your trading journey, and catch all of you at the next session. All right, thanks everyone. Take care and have a great trading week.